no use switching 5 or 10%. You should switch 50 or 100% of your position out of paper assets into hard assets, into gold, into silver.
Ladies and gentlemen, I'm glad to welcome there Egon von Greyerz again for our April issue of our von Greyerz interview. Egon, great to see you as one rock in the middle of madness. Great to talk again, as always.
Jan, yes, we always have good discussions, and it's not difficult to have the good discussions in times like these. And sadly, these times will get worse, the world will be in a total mess by the end of this, and it's not going to take that long either. So, a lot to talk about.
Absolutely. Egon, oil and energy is dominating the news, and rightly so. The energy crisis, we see it and we feel it, although it hasn't really hit us yet. Isn't it true that energy and oil plays a very important and crucial role, functions as the bloodstream of the global economy? Without or with a bit less of this blood or oxygen, the organism dies. And this isn't like the oil crisis of the 70s, because this time the circumstances are much worse. Everything stands or falls on affordable energy, especially the financial system. It's plain and simple, at least my opinion.
Yes, you're absolutely right. And, the interesting thing is, if we just take an example of the global population, it was around a billion people for a long time until 1850. Didn't grow by much. And then 1850, then energy started coming, and oil was being used by people, and therefore machines, and therefore you have had leverage on manual labor. And with that energy, the world has grown at a lot faster rate. And of course, global population has gone from 1 billion to 8 billion since 1850. That's a rate of growth which is unsustainable. And we will, in the coming years, see world population going down, in my view, in spite of that magnitude on a full sample, which is the whole world. It doesn't stop at the top and just go sideways. It stops at the top and comes down. We don't know exactly when, but I think we will correct by probably 50%, which means that the population will go from, let's say, 8 billion to 4 billion. Could be less, could be slightly more, but that's what we're going to see. And that involves, of course, famine. It involves lack of food. It can be war. It can be social unrest and diseases. And as you mentioned, lack of energy. We're getting to the point now when the cost of producing energy, the energy cost of producing energy has grown so much, and we are not anymore getting a proper return on energy because of the cost of producing energy. And if you then add to that a crisis of this magnitude, where 20% of the world's oil is just not available, and it's very unevenly distributed. So we're not just talking about it's 20% less. Asia, for example, is totally dependent on oil from the Middle East and from the Strait of Hormuz. And therefore, we're going to see major problem within Asia. And of course, it's not just oil, it's fertilizers, and it affects food. It'll affect the food shortages. Food prices will go up dramatically. This crisis is a typical end of a monetary era, as I've been talking about many times in our discussions, Jan. This is the end of a monetary era. And the worst things would always happen then. If it hadn't been oil, it would have been banking collapse, and it will probably come also. So we will have one piece of bad news after the next, and the world will go into a period of massive decline and massive problems for everyone. And that's what, sadly, is facing us now, and it's going to start happening very quickly. We have to be prepared, and you can't prepare totally, but you can prepare certainly financially, and you can prepare by protecting yourself, but everyone will suffer.
Jon, we delve deeper into this shortly, but there is surely one question in the minds of many people. In the recent weeks, we've seen that gold and silver weaken whenever oil prices rose more sharply. What do you attribute this to, and when might it end? Because if it doesn't end and we face a real energy crisis, which I expect, the outlook for precious metals wouldn't be all that promising.
Yes, well, of course, right now we can't compare the two because the fundamentals are very different. The oil and gold I'm talking about. So oil, obviously, since there are now major shortages, and the shortages haven't hit the world yet because it takes several weeks for oil to be transported from, let's say, Strait of Hormuz to the Far East or to the North or South America, and therefore. We haven't seen the real hit of these shortages. And as you might have seen, there are already, like in Sri Lanka, they have paid up to $280 a barrel for oil. Now, so that's probably nearer the market price than around 100 that we are now seeing officially. But the 100 is like same as for gold. It's a paper price, and the paper price is not going to dominate for much longer. There will be a question of massive physical shortages, and oil prices will go up dramatically. It'll go up to $200 or more. Absolutely, and probably a lot more also. Then if you look at gold and silver, yes, they, of course, there's not the same shortage there. There's not the same crisis, but we have to look at the fact that gold, for example, has gone up 3 times since 2022. And it's gone up twice since 2024. So we've seen a massive rise. And we saw a big one, of course, in January of this year. And now we're just seeing a correction. And it's not the topic of the month right now, gold and silver. But if you look at the fundamentals, there are hundreds of billions of ounces on the London market of paper silver that cannot get delivery. And that position will explode at some point. When I say explode, it will implode, because if you don't get delivery, and people will then price silver based on physical, and there isn't physical silver available for those hundreds of billions of paper promises. And it's the same for the gold market. Now you're talking about hundreds of millions of ounces outstanding in paper gold, and that gold cannot be delivered either. And if you combine that with a very likely increase in interest rates now, because there's massive pressure on global debt here, and interest rates will most probably go up dramatically, and bonds will also come down, obviously in price dramatically, which is the other side of interest rates going up. And so that will lead to another crisis also, a global debt crisis. Combine that, as I said, with the gold and silver market and with the oil market, and we have an absolute catastrophe being guaranteed here. And the effect, as I said, on oil will be 200, 300, maybe more. The effect on gold and silver, I've been watching it technically for quite a while, and they look like at some point in the next few weeks, they will probably go up massively by multiples. I mean, I could see silver going up $100, $200, $300 or more, and gold going up by a few $1,000s also. So this will be a market which is not an orderly market. And because, as I said, there are massive shortages because of this paper manipulation that we've seen for years. But now we come to the point when people will ask for delivery, and there will not be any delivery. So a very, very difficult time is approaching now, Jan. And that is as I'm saying, that is the end of a monetary era. And people now should take advantage of still incredibly cheap gold and silver prices. Okay, they're twice what they were two years ago, but nevertheless, they will go up so much more. And therefore, now is still the time to buy it, but buy physical, because we don't know what's going to happen to the mining companies. I think we'll discuss that later.
Yes, we do. And Egon, we like to look sometimes into the past because it gives us an idea of what might happen in the future. And there was a phase in the 70s. I remember your talks when you paid 20% plus for your first mortgage. And also in the 70s, there was an oil crisis. And at the same time, we experienced, not me personally, but I know it from history, that gold rose sharply. We are all familiar with this crisis, surprising that oil has even rose faster in the 70s than it is now. Let me show a graphic. I made a little correlation with support of AI. Here it is, Egon. I took the starting point in 1970 at 100 of oil and gold, and then it went until the end of 1980. And we see that the oil crisis hit in 1973, while the gold window was closed in 71, if I'm right, correct? So
Right.
gold was first a bit more up, but then oil surpassed it. We had a flat phase here, and then both picked up sharply with the Iranian second oil crisis. So I would expect now that this flat phase, as you just said it, Egon, for the gold and silver prices will end very soon, and that we face, because compared to the 70s, the situation was completely different. The levels on all entities, states, privates were much lower. So the states and central banks are not able to increase the interest. I expect a massive wave of inflation, and that should hit very soon.
Yes, it's very similar like the 70s. And as you pointed out, I mean, I experienced it all. I was in the UK at the time. And in the mid 70s, I think we had about 15 to 17% inflation for 7 years at least. And you know, there was shortages of everything. And of course there was also not only the oil crisis in the Middle East. In the UK there was also coal miners' strike, so there was a double hit on energy. And you know, I was working or a director of a major retail company selling electronics, televisions, etc. And we worked 3 days, or we had electricity 3 days a week. Rest of the time, and there was no electricity. So we had to sell televisions by candlelight without being able to turn them on and show that they worked. You know, so you know, these crises are not new. You know, and some people are now storing gold in the Middle East, and you know, in my view, and in my lifetime, there has always been conflicts in the Middle East, and to me, that is not the right area for wealth preservation. And now we have a major conflict there. We don't know where it will end, but we do know that historically it's always been an area of trouble. And you know, the bubble markers that we see in Dubai and in United Arab Emirates, that's, in my view, temporary, because it's not based on real trade or real manufacturing. It's only based on money and tourism, and that's a very dangerous situation for a country that it's not sustainable. So I think it's a bubble right now in that country. I know people love it because it's easy to move to and it's tax-free more or less, but nevertheless, we see now that these areas that are too good to be true are actually too good to be true. So yeah, we will see this crisis developing, and we will see the inflation going up dramatically, as you said. And of course, that will mean that it's not inflation, it's not prices going up. Inflation means the value of your money is going down. And that's what we're going to see in Europe, in the US, in Asia, and so at the end of a monetary era, it's the value of money that goes to zero, and the consequences for the everyday transactions that everything becomes more expensive. And sadly, there'll be less jobs and people will have less income, and therefore people will suffer dramatically in the coming years. So it's going to be a very tough era, Jan.
I think, Egon, this crisis, although there are sometimes windy hopes it will disappear quickly, it will not disappear. And Madame Lagarde of the ECB already gave a warning of food shortages coming from fertilizer shortage, as you said. I show quickly the video. You will find it also in the description box. Here it is, and the next to follow immediately. The International Monetary Fund warns of a potential global recession over war in Iran. Link also in the description box. That means to me, Egon, that we really have to focus on the basics. And the basic is now to preserve your purchasing power, your wealth. And this is more and more difficult because the bubbles are starting to burst. Value dropping in real terms, as you see it right now in Dubai, drastically against gold. And this is only the beginning, I think.
Yeah, let me explain to our audience. This direction of markets, of prices, of money, of commodities, is not going to change whatever happens. As I said, we are now at the end of a monetary era, and this cannot be turned around because it stems all from massive debts on all major countries, massive deficits, and therefore a decline in the value of the money because we're printing paper money to compensate for what's happening, but you cannot replace debt by more debt. And therefore, even if the war in Iran or in the Middle East stopped, this is not going to change either. The die is cast, and we're now reaching the inevitable final moment of a monetary history and a monetary era. And that will end, as I said, in markets crashing, in prices going up dramatically, in war, in civil war, in political unrest. There's no one can change any of this now, and so therefore, peace in the Middle East is not going to change it if it happens, because there'll be out there. There's so many other potential crises, like, as I said, the financial system. But also, I don't believe there will be peace in the Middle East. It'll go on for a long, long time. Iran is not going to give in, and Trump, who boasts that he has stopped more wars than anybody else. But if you start more wars than anybody else, you can stop more wars than anybody else. He never mentioned that, but it's as simple as that. America has started more wars than anyone since the Second World War in 1945, and therefore, of course, it's easy to be then set a record in stopping wars if you start them all yourself. So this is going to be, Jan, something that we will talk about for many years to come, and people have to prepare. But we talk to people who have savings, Jan, and savings. Most people have debt in the world and not savings. So if you have some savings, or if you can spare a little bit of cash, you take Venezuela 25 years ago, for example. If people then, the Bolivar was about the same as the dollar at the time. If you had then saved a little bit of money, it would have then have been your savior when you have got to this incredibly difficult hyperinflationary period that they have in Venezuela. So it's not only for people who have a lot of money, even smaller money. If you can put a little bit into silver, gold is more expensive, into silver, and that will help you in bad times. Very, very important. But also, the most important thing in these difficult times is not just buying gold and silver, but is having a group of people around you, friends, family, etc., that you support each other, help each other, because that's what you need in difficult times, because we are going to need a support group around us. It's so important. And of course, as I point out many times, there's so many free things in life. We don't need all the gadgets and all the things we buy and we go on exclusive holidays, etc. The most important thing in life is, except for friends and family, are things like nature, books, music, sports, etc. And that most people can do for free. And those are the things that will still give a lot of value and happiness in life. So focus on the things that actually can make you happy rather than focus on the financial side. Of course, you need food for the day, but hopefully, there will be shortages, and the world, the Western world certainly can do without a little bit of food, since so many people are overweight. But still, I think as long as you focus on helping others, then you will survive. Like everybody survives crisis, but it'll be tough. It'll be very, very tough for the world.
You are so right, Egon. Nevertheless, we have to pay our bills, everybody of us. And as you said, there are already many people who cannot save. We try our best to help them through this situation. And a different topic, but it belongs also to our main topic here, is mining stocks, because my intention today was to keep it simple, while many investors are in those markets rather confused, and it jumps up and down. Confusion is everywhere, manipulation like last Friday. It's overwhelming, and we have the energy crisis, and mining stocks belong to our precautions because we have the leverage there. But now we see they have a critical weakness, and this is, especially in remote areas, the dependency on diesel fuel. We saw it already in Australia, Egon, and it can also spread to Africa, everywhere where mines depend on energy supply by diesel generators. And that brings me to this simple question that we rather focus on this simple thing, and this is physical metal. We can work with mining stocks as I do, but we have to keep a very close eye on those developments as we see them now appearing in Australia, maybe in remote areas of Canada also. Who knows? Everything can happen.
Yes, and that's why, Jan, when we started focusing on preserving wealth, as we saw the end of a monetary era coming about 25, 30 years ago, and we bought gold in major amounts in physical form, storing it outside the banking system, and then also helped other people doing the same. And we decided to focus only on the real physical asset, for the simple reason that eliminates more counterparties than holding stocks in gold mining or silver mining companies. Because if you hold the stock, you're dependent on the financial system as a custodian. And if a bank goes under, for example, or the financial system goes under, you might not get hold of your stocks, or it might take 6 months or a year or 2 years. And then, as you say, also, these mining companies are often subject to political problems in the countries where they operate, cash flow problems. Now it's better because the price is higher. But, as you say, the energy shortage is a massive problem for them, because in the end, yes, the cost of energy might be such high, and on top of that, as we talked about, the shortages might be such that they can't produce. And then, of course, if that's the case, if we can't increase the gold production or silver production to the extent that we expect, and remember, we talked about the hundreds of millions of paper assets of ounces in gold and silver also, and that one day want to cash in. And if there isn't any gold or silver available, which there isn't today, and it can't be produced either, people who hold the gold and silver are not going to sell it at current prices. That's what I'm saying. Why I'm saying that these metals are going to go up by multiples. There will be no sellers. There'll be no offers. No one will offer gold or silver at any price. Maybe at massively higher prices, but people rather sit on it. So this is a situation which is people haven't expected. And yes, mining stocks give a better leverage, but if they can't produce the gold and silver because of the energy problem, then they're in trouble too. So yes, I mean, that's why we went into physical only. We are not experts on mining stocks. And I know a lot of people have made money, obviously, on mining stocks, and there are very good experts. But ourselves, we are very simple in our approach. Buy physical, store it outside the banking system. That way you have access yourself in the safest jurisdictions, in the safest vaults. And that's real wealth preservation in the way that we look at it.
I agree, Egon. And other hard assets will probably also profit in the coming years, because this energy crisis, I think, will be a catalyst for the financial deterioration of the state finances. We will now see the hockey stick go even more rampant upwards of the debt levels, of course. And Tavi Costa has a nice graphic published on X that shows that we have so much room left. Incredible. Real assets versus financial assets. Can you believe this, Egon? Here is the height of 1980, and the percentage or the relationship of real versus financial assets, it's still so low, although we saw this massive increase in gold and silver and copper, for instance, other commodities, but the financial assets have increased even more in the past time. This is a sick movement. It has to correct, and there is so much room. We are still at the bottom, literally.
Isn't this a wonderful graph, Jan? I mean, it's absolutely, this is quite remarkable. So that you're talking about here real assets being down by almost 90%, 80 to 90% against financial assets. And this graph is now turning up, and you will see the biggest wealth transfer in history as this graph goes up to the one level and above it, in my view, far above it. People who hold these financial assets, which are paper assets, of course, will lose everything if they don't swap their financial assets, their paper assets, to real assets. And the graph, for example, you take the S&P 500 against gold, it's in this similar position. Gold is at the very bottom. It's in a similar chart, of course. Gold is at the very bottom and has just turned up against the S&P now. A long-term chart, just like this one. And that means the same. Stock markets are going to crash in real terms against real assets. And gold is going to go up dramatically. I expect paper assets to whether they are financial assets or stock markets or whatever, that they will lose 90 to 95% in the coming years against real assets. And the number one real asset is, of course, gold, and then some silver. So, and that's the people who don't realize that, and people, I beg people, do something about it today. Don't hang on to the stock market. Stock market might go up a little more because it always finishes obviously on a high before it turns. So it might go up a little more. Don't worry about it, because you might have another 5 to 10% up or nothing. But the risk on the downside is 95% fall against gold and silver. That risk is not worth taking. It's today you should switch. And you should switch to physical. I mean, that is real wealth preservation. And that people who don't do it are going to be very, very sorry in coming years, because all the paper assets that they have and all the paper wealth that they think they have, measured in paper money that's going down by the day, all of that will just disappear like just a puff of smoke. But you have the opportunity now to swap. I wish that more people, of course, mainly people who are interested in real assets, gold and silver, are listening to this. But I wish other people would listen, because that would save them dramatically from an absolute financial disaster in coming years.
I know what happened in the 1920s in Germany and what came after that, Egon. Let's finish today's discussion with some graphics that I took from the recent report of Ronny Stöferle. Starting with this one, Egon, uncertainty index at near record highs. We have only 9/11, invasion of Iraq, higher than currently. But I think that will catch up and reach even higher limits, because I cannot imagine a time more dangerous than the current time. Next page, I have number 12. Relocation of assets. Here we see Egon gold reserves as a share of global total reserves, and the low is behind us, but still plenty of room upwards. And the last for today is page 25. I can recommend to our audience only to have a look at the whole piece. It's very worth reading and checking and evaluating gold allocation by private investors as share of global equities. I know that you like to show this number. It's now a bit higher than 0.5%, but 2% is still very low in comparison to the all-time high of 1980. And we are now in a much worse situation than in 1980, like we are
Absolutely.
in a more dangerous situation like in the 70s when gold and oil picked up. So also from this graphic, there is plenty room to move up.
Absolutely, and it will do. But it will obviously, it will move up faster also because stock markets will crash. But you know, the sad thing is that stock markets have spoilt investors for such a long time. It's been a totally, you know, an investment that couldn't fail, and every correction has been forgotten within a few weeks or a year or so, and it just kind of continued up and up and up for one simple reason, that money has been printed in unlimited amounts, and therefore that liquidity has just gone into the stock market. But people don't understand that is about to end now, and I wish that more people would understand it and take action. You've got to take action now, and it's no use switching 5 or 10%. You should switch 50 or 100% of your position out of paper assets into hard assets, into gold, into silver. That's a dramatic shift, but that's what we did 25 years ago when gold was $300 an ounce and silver was about $4 an ounce. That's when we shifted. We do it when it's cheap, when it's unloved and undervalued. But what I've been saying here today is that gold and silver and other hard assets are still unloved and undervalued. So it's not too late to buy today, even though, as I said, we came in a lot earlier when gold was $300. But it is still very cheap today. And if you don't realize that, you are going to be very, very sorry in coming years. So please change your positions, get some physical gold or silver, or get a lot of physical gold and silver, and get out of your paper assets.
Can only agree. Thank you, Egon, for today. I wish you a good time in Tuscany. Keep a bottle of olive oil for me, okay? And then who knows what we have to discuss next month. Thank you, and good time in Italy.
All right. Thank you so much, Jan.
Auf Wiedersehen. Bye-bye.
Thank you.